Welcome to LeonCo and welcome to your weekly financial news. Welcome to LeonCo and welcome to your weekly financial news. And on this week's financial news, we'll be discussing the federal government cut that happened on this week, this past Tuesday, March 3rd, 2020. Yes, on March 3rd, 2020, the Federal Open Market Committee decided to cut back the federal fund interest by a whopping 50 basis points. And what does this mean? Normally, the interest rate was from 1.50 to 1.75 range, and now it has turned down to 1.25 to 1 point in range. Why did this happen? Well, the day before, on Monday the 2nd, the Dow, the SP 500, and the whole stock market has been rallying up thanks to a more stabilization from investors and from stock buyers because of the coronavirus. Well, the federal bank decided that they should rally behind this rally in the stock market and decide to use this method as a federal cut, as they used in 2008 when the economy collapsed, just to stimulate the economy and try to stabilize what is happening in the economy in the United States. But they found this staggering reality that instead of the stock market going up, it immediately went down. Yes, for those of you who followed the stock market on March the 3rd, found yourself that immediately when you received the notification that the federal committee was going to cut back with federal interest, the stock market went down. I don't know if it happened to you, but it happened to us when we were working on our stocks, that we found out that immediately this news breakout, the stock market went staggering down. And why did this happen? The federal committee wanted to try to stimulate the economy, and by funding those cuts in the interest rate, they thought that banks would lower their interest rate in their car mortgage, in their car loans, house mortgages, in their loans, personal, commercial loans, all those loans that they do. But the reality is that the interest rates for all of these loans are already low. So if they do an additional cut, there will be even lower. The federal committee thought that by lowering their rates from their interest, people will start to invest more in the economy, to take out more loans, so the economy will stagger its way and find its normal cycle back to normality. But the reality is that with the situation that is happening worldwide with the coronavirus, most people don't want to go out from their homes. So if people don't even want to go out to the movie theater, to the park for a walk, to even have a nice dinner with their friends or family, why would they want to go out and get a car loan, to get a house mortgage, to get a personal loan? It just doesn't make sense. There's a sense of fear in the United States thanks to the reality, misinformation, the speculation, and all those things that are happening worldwide and in the continental United States because of the coronavirus. So many people are scared. Normal, everyday people are scared. Stock buyers, even the people in the stock market, are scared to see what is going to happen, because the reality is that no one actually really knows how the United States is going to fight forward if this coronavirus becomes a continental epidemic. So people are scared, and the federal cut was something that the federal committee was trying to stimulate the economy, but sadly it failed. So this is your weekly financial news. Stay tuned to our channel for more news and updates about this topic and other topics relating to your everyday financial life. Hit us with a like, subscribe to our channel, leave us down a comment below, but always remember to have that king mentality.